All right, Accounting 101 Part 2. Let's take a little sneaky peek at how the income statement and balance sheet work together, because they do. Okay, income statement is revenues minus expenses equals net income, right? We talked about that before. And then net income is split into either retained earnings or dividends. So let's say you have a stock and it's paying you a dividend. That dividend is coming from that company's net income. Companies report their financials quarterly, dividends released quarterly, like starting to make sense, right? Then we have the balance sheet. Assets equals liabilities plus equity. Equity is part of retained earnings. But if we look here, your net income was split into retained earnings and dividends. But we take the retained earnings and we put that right back down into the balance sheet in equity. So if a company reports a net income and they're taking part of that as retained earnings and they're putting that money back into the business, that is going to increase their equity, and it's also going to increase their assets because that balance sheet has to balance. So say this increases by $10,000, the assets also has to increase. So they get $10,000 of cash here reported as equity, and then they're going to reflect that up here in the assets as $10,000 of cash.